Hey everyone, George here. So today we're gonna have a guest, Anselmo Ventura, who's my colleague, and I'm very excited to have him. He's a tax credit specialist. He does a lot of tax credits, including R&D, utility credits, all these other credits, uh, a lot specifically in the construction space. And there's a lot of myth, a lot of kind of misconception on what construction firms would qualify for, especially with respect to R&D. So that's exactly why I'm very excited to have him here today. And without further ado, let's get started. All right, Anselmo, I'm very excited to have you here. I've been telling the listeners. And what would be the 30-second intro on Anselmo?
Yeah, so my name's Anselmo. I am a senior business developer for URC Refunds. We are a specialty tax firm based out of New York, and I'm here in Los Angeles. I work with all of our California clients. I am bilingual, so we get a lot of the Spanish-speaking clients, especially in the construction trades.
Okay, very cool. And so what I was telling you, like when we were having lunch the other day,
Mhm.
what I was telling the listeners is, when people think R&D, they usually think, tech companies, pharmaceutical companies, things like that. So like R&D tax credit, like I guess from a high level, what is it? And I mean, could it be applied to construction companies?
Sure. So that's a huge misconception that it's not just for pharmaceutical companies. The IRS definition of research and development, it's not limited to scientists and lab coats. It's really about solving technical problems and improving processes in construction. That might mean testing new foundations, figuring out how to meet tighter energy codes, especially here in California, or redesigning a method to cut down on material waste. So, yeah, construction is actually one of the most hands-on industries for innovation, but instead of happening in the lab, it happens in the job site.
And what types of, contractors and what types of activities have you seen qualify like for R&D?
So there's eligibility across almost every trade. General contractors, design build firms, specialty trades, think of like HVAC, electrical, concrete, roofing, plumbing, all qualify when they're developing or improving their methods or materials. Even smaller firms doing custom retrofits, prototypes, or design challenges qualify because they're solving unique technical problems. The key factor is whether there is uncertainty in how to achieve a result, and the company is testing or refining ways to get there. If a contractor is spending time and money trying to figure out how to build something better or make it more efficient, then yeah, they're more likely doing R&D, and they probably don't even realize it.
Right. Let's talk actual dollars and, cents here. If we had $100,000 of revenue, for every hundred
Mhm.
thousand dollars of revenue, to keep it easy and straightforward, um, I know it all depends on how much was research and qualifying activity, qualifying expenditures, payroll, all that. But in your experience, what have
Mhm.
you seen for a construction company for how much tax credit is reasonable to yield?
So the research and development tax credit, it's a mix of both federal and state credits. You get 6 to 8% on salaries by the federal government, and you also get another 6 to 8% by the state of California. This is for any people that were working on the projects. It includes the people that were touching the project plus their manager. So it would be you have to account for all those people that are involved in this side in the R&D projects. And for materials, you get 15% reimbursed you by the state of California. So to give you an example, if we're sticking with $100,000, let's say there's a company that spent $60,000 on salaries, they would get roughly about $9,000 combined, but by from both the state of California and the federal government. And if they spend about $40,000 on materials, they'd be getting 15% of that back, which is about $6,000. And there are some companies that will occasionally pay contract research payments. Those are reimbursed at a higher rate of 25%. But for the most part, most companies will be getting reimbursement on salaries and materials.
So just to confirm, so it's basically a 15% tax credit on the actual spend. So like on $100,000 spend, we're talking about like a $15,000, dollar for dollar tax reduction.
Correct. It's a tax reduction, and it's a dollar for dollar, so they'll be able to take it for the year in which you're applying for, and the previous 3 years as well if it's your first time applying for it.
So I mean, yeah, that's great. It's like and this is a dollar for dollar credit,
Hmm.
uh, as our listeners know. If you were to tell, let's say you had an HVAC contractor come to you tomorrow and ask, there is a lot of work I do in order to see if such and such electrical system or HVAC system would work. How should I like go about documenting this, or what are the processes that I should be putting in place to be able to maximize my R&D tax credits?
Sure. So the type of documents, the IRS mainly looks for two things: evidence of qualifying activities and the proof that these are related costs. So you don't need to be, it doesn't have to be some sort of lab report. Just project records show technical decision making. Some examples include like project files, CAD designs, drawings, uh, change orders showing design revisions, job costing, payroll records, stuff like that, that kind of shows who's working on these projects. And then notes. It could be photos, videos, emails that are describing testing and like problem solving process. So as long as there's documents that are showing, you don't really have to have something that seems very rigid. As long as that documentation is there, the goal is to show the IRS that the company wasn't just installing by the manufacturer's I guess, suggestions, but that they were actually developing or improving something during the process. So it doesn't always have to be with a bow tie. It could just be raw data stuff that you guys are doing out there in the field.
And so, where the rubber meets the road
Hmm.
for, the contractors listening.
Yeah.
So like would this amount to changes that maybe they need to make on their, invoices, on their work orders, on their proposals, their RFPs? With the IRS, documentation is king. So the more you're able
Hmm.
to document, like you mentioned, photos, some sort of like proof that you were trying new methods, trying new materials. Um, but is it changes to the wording of the invoices they should be making? And like, what are the most common and supportable wording changes, like you would say, should be made, implemented, their proposals or invoices?
Sure. So as far as like the wording, the the job of our team is to tell the story on what it is that your company is doing. We have to put it in a way where the IRS agent is going to receive the paperwork, and when they're reading through the description, what they're doing and what they were trying to achieve and how everything gets put together, that yes, this is a qualifying activity, therefore this company is eligible for the R&D. So to give you an idea, like there's a lot of companies that, especially like in building materials, in concrete, they're trying to figure out how to make something cure faster or uh, r- have more strength. They're probably just doing this on a day-to-day basis, but all those little changes, whether it's notes um, on a piece of notepad or on their computer, those are things that we're going to be using when we're telling the story. We do have some clients that are changing on their job. They're assigning a different job code on their accounting system or uh, whatever they're using to keep track of projects. Other companies, they will start taking notes on an Excel sheet, and they'll just say like, "Hey, we had this person, and this person working on this redesign here for these many hours," and it usually just has to be averages that will help us kind of get an idea of like, "Hey, this person's usually working 6 hours a week on this project versus 20 hours a week," and all those little things start adding up. And once you speak with a R&D specialist and you do this your first time, you'll have an idea of who's eligible for the program because it's the person that's touching their project plus the supervisors. And once you get an understanding of how you qualify for this, then that will help your teams figure out how we should start assigning either job codes or should we just put this on Excel sheets or how we should be tracking this. But um, I would say first, just talk with somebody that knows about the R&D program.
Yeah. And like, is it in your experience the first year or two, maybe they hit some road bumps in terms of, it's harder to explain, go back, 12 months, 24 months, however long we're going back and try to figure out who worked on what. There's maybe more estimation involved, but going forward, you maybe improve their processes to like help accommodate for the R&D. Like, is that what
So
you've seen? Or
yeah, typically, the owners will sometimes be involved with these R&D projects. Usually, it will be somebody high up in the company and a project manager. The project manager, especially the ones that have been with the companies for a long time, they will know what projects were going on and who was working on them. Um, Especially if it's something where you're constantly updating the designs, or if it's a concrete mix and you guys are adapting it for different areas, that project manager that's been working with your team for the last 3 or 4 years is going to know kind of about on average how many times you guys had to change the mix, how many times you guys had to dig it out and apply it back in, let it cure, and who was working on those teams. So yes, it is a little, it could be a little hard to remember who was working on what projects, but usually the best people for this are going to be your managers. Whoever was working within those teams is usually going to remember this stuff. Plus, they can use their notes. They'll probably have text messages or emails, and that's how we start recreating what they were doing. And because companies can apply for this program for the current year and the past 3 years, typically that's how we're building that story for the previous years when they're applying for the first time.
yeah. I could imagine that's like hell, like the first year, everyone's trying to recreate the wheel going back so many months. And then going forward, it probably eases up quite a bit once everything's in place. Like you mentioned, the job codings,
Uh-huh.
the processes, like all that, the bookkeeping codings. But
Yeah, it,
yeah,
it does get easier, especially because once the team is involved in trying to recreate that story, you now have managers knowing, hey, those activities that we're doing qualify as R&D. So let me start assigning that to this, or I'll keep notes of that here, and I'll just put everybody's names who worked on this and the averages. And that does help out for this year and then the following years that you're working on the projects. We're about to finish 2025, and we have several of our clients who they have a Google spreadsheet and they've just been putting on the different projects and all the data that we're going to need next year when we're working on this R&D project. They already have it ready to go. So it makes things a lot easier. It also lets them know, okay, this is how much money we might be able to get back next year. So we can invest a little bit more on this project.
yeah. Yeah, let's talk about like how far back you can go. Like what are the periods? Like I know I think it's up to the statutes, but yeah, correct me if I'm wrong. Like how many years can we amend?
We can go 3 years into the past and the current year. So as of today, November 3rd, 2025, we can go back up to 2022 and amend those years, 22, 23, and 2024. And for 2025, we'd be filing next year. But it also depends on what time of the year you're filing the amendment for. So for some companies, if you filed on extension, let's say July 28th, then the time in which you can go ahead and make that will be 3 years after the filing period on July 28th as well.
Yeah,
So it varies from company to company, but as a general rule, it's 3 years from when you filed.
3 years. And that's for both federal and California.
Correct.
Beyond the R&D credit, what other credits are you seeing? Like I know a lot of these kind of expired or will expire. There's like with respect to construction, there's the energy building credit. There's what was it? The 179D that
hmm
has, any um, charging stations, things like that you set up. What other kind of credits do you see that are very common like in this industry?
Sure. So the biggest one is the R&D. But the other ones that are worth mentioning, you kind of just touch on one of them, which is the 179D. Especially for the state of California, a lot of this stuff is requiring more energy efficient building codes. And yeah, so it's essentially one of the it's probably the second runner-up to the R&D credit. It does rewards contractors, architects, engineers who design and install these systems. I think I heard you talk about it in another video. Um, so yeah, if it, after the 179D. You have the WOTC credits, Work Opportunity Tax Credits, and it provides a federal credit for hiring individuals from certain target groups like veterans or people who have been unemployed for a very long time. And there's also the Section 179 expensing and bonus depreciation, which I know for sure you talked in another group, sorry, in another video. The cost of new machinery, trucks, tools, rather than expensing them over several years, you can do it all in 1 year.
Yeah.
And if you combine that with R&D, you're pretty much you're putting a big dent to your tax bill. So if you work all this together, it's pretty effective. So, especially for some of the viewers that are in the construction and trades, they might be retrofitting or working on projects all around the US. There's another program that's offered. It's a result of the Inflation Reduction Act. It's offered by the U.S. Department of Energy and managed by the California Energy Commission. It's called the Tech Clean California. Essentially, what this is if you're working on these retrofit projects, if you're working on multifamily units and you're installing heat pumps, HVAC units, things like that, you can get a credit anywhere from $1,100 to $8,000. And a lot of these credits do stack up. Now, these are rebates, they're not tax credits. So, there'd be a little bit of difference there, but it is something that we can also help offer. So if you guys are doing a little bit of R&D here and there throughout the year, and on top of that, you're doing a lot of these retrofits and installing energy efficient parts, there might be a good refund for you guys, both the state and federal tax credits, and the state rebate programs, which should help out your bottom line.
I know I have clients that are, in the eight figures, like 20 million revenue, and they use the R&D tax credit and basically with that much revenue and they have very significant taxable income, they pay almost little to no tax. They become
Mhm,
subject to that AMT. There is like a
mhm.
small AMT that kicks in at
Yes.
some point. Yeah, so I mean this is definitely a really good credit. If
Mhm,
you're in construction, you have significant taxable income, I would highly recommend get in touch with Anselmo, get in touch with a group that does this, specializes in this, especially with respect to construction, because there's a lot of R&D experts you'll talk to, and they only do, let's say, tech companies, and they say, oh, nobody else will qualify. But if you actually speak to an industry-specific expert, will get kind of somebody who's been in the weeds with that, type of company and can accomplish this for you.
mhm.
And am I right, Anselmo?
No, you're right. There's a couple. There's a lot of tax firms that are out there, but there's a few of them that will work across multiple industries. Usually they stick with one industry and that's all they do. So a lot of times, special and unfortunately, yeah, you'll have somebody from the construction company calling you to see if they can get some information on it, but they'll get turned down because it, it's it makes a lot more sense for some companies to focus on software developers or some of these Silicon Valley companies because the money's a lot bigger. And in reality, we work with a lot of small businesses and sometimes the 20, 30, $40,000 means a lot more for a small business than it does for these multi-million dollar companies. And that's why we don't mind talking to small companies because if we can help them find those credits, we know that when they get bigger, we'll probably still be working with them. We have a couple Fortune 500 companies that we've been working with. Our company's been around for 34 years and we started working with them when they were smaller. So it's kind of neat being able to start with a company when they're this tiny group just getting a couple tens of thousands of dollars in credits, and now that we're working with them they're getting several millions back from the same programs that they were taking advantage of 10, 20 years ago.
So if one of our listeners out there wants to see if they qualify for any of this, what can they do to reach out, or what would be their next steps?
Uh, yeah, so there's a contractor out there that wants to see whether or not they qualify. The first step is just have a quick conversation with somebody who understands the R&D program in construction. We usually start with a 10 to 15-minute qualification call. It's completely free. And we ask about recent projects, materials, methods tested, and time spent developing or improving techniques that you're using. And from that call, usually we can identify whether there's a valid opportunity and how big the credit might look like. You can either email me at Anselmo, it's ANSELMO at urcrefunds.com, or you can call our office, which is 516-221-6390. And yeah, there's no obligation. Like with a 50-minute phone call, you might be able to uncover tens of thousands and not hundreds of thousands in credits.
And like I know basically they wouldn't pay you anything unless you get them the credits. Is that right? Or
Correct. Yeah. So we are on a win basis only. So the only time we get paid is when our client gets paid, and that also, I mean, whenever our clients get letters with URC refunds on in the mail, they usually know it's because they're getting money back. And yeah, we only charge you guys once the state of California and the IRS approves the tax credit.
and what's one final piece of advice you'd give to contractors who are thinking about these credits?
Yeah, so biggest piece of advice, please do not assume you don't qualify. A lot of the companies that we've worked with, they had no idea that their work met the R&D criteria until we broke down what they were doing on their day-to-day. If you're solving problems, if you're trying to improve the efficiency of something, if you're developing new methods to meet tax codes, especially here in the state of California, or just to meet your client expectations to stay competitive, you're already doing R&D. The tax code is designed to reward innovation, and especially in the trades, there's a lot of stuff going on. So yeah, just take that first step. Call us, have that conversation, and again, you never know how much money you might be saving in your tax credits just for picking up the phone and calling somebody.
All right. Thanks so much, Anselmo. We're really happy to have you on, and I think, without a doubt, this is one of the more value add episodes. And I really do think that every contractor out there, especially as their business is growing, scaling, really should take advantage of these tax credits, because at the end of the day, when we're doing tax planning, tax strategizing, um, for the most part, we're taking deductions. We're doing income deferrals, we're doing like tax plans that allow a deduction, not included in income, that kind of thing. But with the tax credit, you're getting a dollar for dollar reduction in the tax liability. So it is definitely the most valuable piece of the tax planning that we can possibly have, assuming that we can integrate. And that just
Yeah.
kind of all starts with you guys reaching out to Anselmo, people who have actually had experience in the trades with respect to tax credits and getting the whole process started. So thanks again, Anselmo. Very happy to have you on.
Yeah, thanks for having me. And please, guys, reach out. Thank you.